Welcome back to Lessons in Property with me, Steve Hand. So, if you're a property investor and you're looking for funding for both the purchase and the refurb, I've got just the lender for you in this episode. Today, I speak with Josh Knight at Octane, and they're one of the best lenders in the marketplace for giving you a high loan to value against the purchase price and covering all of your refurb costs. Not only that, but they've got one of the lowest rates in the market too. So enjoy this. Hi everyone. So today I've got Josh Knight from Octane. Hi Josh.
Hi Steve, how you doing?
Good, good. No, it's great to see you again. So thanks for coming on and chatting through what you guys do best. I've been just brushing up to make sure I understand your criteria, not as much as you do, but yeah, I really like Octane because we placed a guy called Tony. Tony won't mind me saying, for a project in Newcastle where it was a refurbishment loan. Perfect because it's in England, it's in Newcastle. It was in a good location, a detached property where value's being added, and Octane were perfect for that. So I just thought I'd ask you to share with us maybe a couple of case studies or the areas that Octane really stand out in the marketplace.
Well, I suppose Octane are quite a straightforward company in that we only do one thing, short-term funding for property investors. And I think maybe what we're best known for, or certainly one of our most popular products, is our refurbishment products, like you said, you've used before. And that's really for investors that are looking to engineer value, whether their goal is to improve a property's value with the view to selling it or improve its yield with the view to keeping it in their portfolio. And we see everything. If you imagine the sort of light to heavy refurb spectrum, we see everything from sort of light decorative refurbishments, maybe an auction purchase of a property in bad condition that just needs kitchen, bathroom, maybe a rewire, all the way up to big commercial to residential conversions that involve substantive structural works and everything in between.
Oh, that's great. Yeah, Tony's is an example of that one whereby it was purchased at, let me think, 300k, and the value being added to it was circa 40k. And the new value, it's just gone on Rightmove for 450.
Yeah.
So it's
Great
only really
example.
a relatively light refurb because it's a smallish detached property, which would swallow 40 grand, I guess, for kitchen, bathroom, the usual sort of cosmetic refurb that we expect. But no planning was needed, so it was all pretty quick. Yeah, I remember Tony saying one of the things to me that you have to start the works, and this is normal with the lenders, isn't it? You have to have some funds to start the works, and then the drawdown comes when, is it 30,000, when 30,000's been spent?
Yeah, 25 to 30,000 is typically our minimum draw. So you're right, it's done in arrears. So we lend at 75% loan to value net towards the purchase. So the client
Yeah.
puts in the 25% deposit, and then they self-fund the first tranche of works. We would then send an asset manager employed by us to meet them on site, just to do a visual inspection to make sure that it's reasonable that they've spent 25 grand of their own cash, and then we would reimburse them for that money. And then that process
Yeah.
rinses and repeats until the whole project has been fully funded. As
Yeah.
long as you've got that little bit of cash flow to get started, and
Yeah.
25% deposit towards the purchase will fund the rest.
Yeah. No, that's great. And where does say Octane finish where traditional development finance takes over in terms of maybe percentage of the value for the build costs that you allow?
Yeah, so our core refurbishment product has kind of two rules in terms of heaviness of project. So if the build costs are over 500,000, or if the build costs go above 75 or maybe 100% of the current value of the property,
Yeah.
that would typically, not always, but typically be too heavy for our core product.
Got
We
you.
did at the start of the year, though, introduce a new development finance offering, which we would put those heavier refurbs into. So if it
Yeah.
falls foul of one of those rules and it fits the criteria of that development product, then we
Yeah.
fund it through that offering. If that
That
makes
makes
any
sense.
sense.
Yeah, yeah, no, that's good. And I guess that the core sort of case studies and product types,
Mm,
property types that you deal with are your HMOs, where
mm.
lots of value is being added, like you say. There might be a commercial conversion into a resi. Typical flips. That's where most developers will think of Octane.
Yeah, I think if I had to condense it to two or three examples, your example is a great one. Buy at a good value, add some value, whether it's cosmetic or maybe just exhausting your PD rights, maybe
Hmm.
converting the loft, doing a small rear or side extension, and then looking to sell the property, add value, and then flip. The second most common is house to HMO conversions, like you say. We've seen a huge explosion of this in the last 18 months to 2 years, and just a reflection of landlords becoming frustrated with their yields being eroded by rates and
Mm.
running costs that have climbed so sharply, and they're going in hunt of better returns. And of
Yeah.
course, a house to HMO conversion, whilst it comes with its risks, is a great way of improving the yield within your portfolio.
Now, something that sticks out in my mind, Josh, is the attractiveness of your rate. And this game's not all about rate. We know that, don't we? It's about deliverability and a lender supporting you. But we do have to mention it because, you know, finance comes into it, cost of finance comes into it. And your rates are circa sort of 0.8% per month, which when we convert that to per annum, it's around 10 or under 10% per annum,
It's
which
actually
is
slightly cheaper
phenomenal.
than that. I mean, our starting bridging rate is 0.74 as of today.
Okay.
Starting refurbishment rate is 0.77.
Yeah.
The reason I'm saying starting is that our rates are driven by loan to GDP.
Yeah.
The highest rate that we offer is 0.83. You very,
Yeah.
very rarely see a higher rate than that from us, but they're linked to the Bank of England base rate. So only
Yeah.
15% of the bridging market offer a variable rate, which in this current market where it seems that the base rate is dropping and is predicted to continue to drop, is
Yeah.
a good thing because your client's rate would reprice mid-loan term. So
Yes.
the day that the base rate drops, you're immediately shifted onto a cheaper rate. Obviously,
Yeah.
the opposite would work if the base rate were to go up, but it seems
Yeah.
we're moving in the right direction at the moment.
The general consensus is a lowering of rates, isn't
Yeah.
it? That is a key point, that the base rate tracker.
Yeah, and I think, but if I'm honest, whilst rate is really important, I think the thing that wins us the most deals on our refurbishment product is day one leverage.
Yeah.
When we compare our product to most traditional bridging products, where the lender might start at 75% gross, but then they'll deduct fees and interest,
Hmm.
the net loan that the client actually gets on the day the loan completes is maybe 60, 65%.
Yeah.
Because when we're doing a refurbishment loan, we add interest rather than
Yeah.
deducting it. And it rolls up within the facility
Yeah.
up to the loan to GDV limit.
Yeah.
But the product of that is the client just gets more comparatively.
More day one, don't they?
Yeah.
Yeah. No, that's great. And then if they're looking to do another project in tandem, then they've got more funds, haven't they, to do that?
And it's funny because even the clients that when you see their bank statements, they've got loads of cash in the bank. They just don't want to tie it up in the project. They want to stay
No.
liquid because
Yeah.
if another opportunity arises, they want to be able to move quickly.
Yeah.
So we never see clients ask for anything other than max leverage.
No,
Doesn't
it's
matter who
true,
they
isn't
are.
it? It's true. Yeah. Can I get the maximum? But you're not charging for that. That's the thing. You're giving a high net LTV day one, and
Mm,
you're not charging a premium for that. You're one of the most competitive funders in the marketplace in terms of
yeah.
rate.
And it's interesting. When we do a refurb loan, our rates are driven by loan to GDV. So even if we start at 75, but we end at 60% loan to GDV, you'd actually
Mhm.
get our cheapest rate, the 0.77 rate.
Ah,
Um,
right.
and that's the only driver of rate. What we've also found is that there seems to be lots of lenders that have a light refurb, maybe a moderate refurb, a heavy
Yeah.
refurb, an extra heavy refurb, and each of them
Yeah.
comes with its own criteria and rate structure. And
Yeah.
we do it in that way. We've got one product.
No, just quite simplified, isn't it? So how long have Octane been going now? And are you allowed to sort of say whether your funding lines are sort of traditional mainstream lenders or just to give us a bit of background and give clients a bit of comfort?
So we founded Octane I say we, our founders founded Octane in early 2017, and we started lending in May of that year.
Yeah.
So we are sort of 7.5 years old.
Yeah.
We're close to £2 billion of lending since we launched. So
Wow.
scaling and growing the business quite aggressively.
Yeah.
I think one of the reasons why we've been able to lend so much so quickly is because we're funded in quite a simple way.
Yeah.
What you seem to find with non-bank bridging lenders is that they have a number of finite funding lines.
Yeah.
Every time they exhaust one, they need to find more, and it's that constant kind of battle of trying to make sure that they have access to capital. And we're not funded in that way. So we have one funding line. They're an asset management firm with substantial assets under management.
Yeah,
And they own a stake in Octane. So they're an equity partner within the business.
got you.
I think that gives us stability,
Oh,
but it
massively, yeah.
also means that our cost of borrowing is lower. And that's why, coming back to rate, we
Yeah,
have lots and lots of mouths to feed in
yes.
terms of lots of different funding lines. We just have the one.
Yeah, no, that's brilliant. And so the developers that you typically deal with, do they need to have experience, a track record of maybe doing two or three before, or what do you usually ask for with experience?
So I think with experience, there's almost like if you imagine like a chart of um, as the heaviness or the complexity of a project increases, clearly the requirement for the client to be experienced also increases. So if
Yeah,
we're talking about a 6-story office building being converted into 15 flats, and
yeah,
it costs £500,000, we would want the client to have experience of doing projects of that scale.
yeah,
But if we talk about like your client, for example, doing a cosmetic refurbishment,
hmm,
we definitely wouldn't need the client to have any experience.
yeah,
Even potentially a house to HMO conversion or something similar like that, where it's
yeah,
the internals of the property just being altered.
yeah,
As long as the client has a reputable contractor to do the work for them,
yeah,
ideally on a fixed price contract, we can kind of shift our emphasis on experience onto,
onto the contractor.
yeah, the contractor that's actually doing the work.
Yeah, that makes sense.
What we find is that, lots of the people that we lend to they're not full-time property investors. They're just doing a few projects on the side, and they have
Yeah,
9 to 5 jobs. So the concept that
yes,
they're going to be on site with a hard hat on, knocking down walls, is not realistic. It's likely
yeah,
that they will have outsourced the build team. I think what we really like when we see an inquiry from a lesser experienced developer is one that's clearly organized.
hmm,
Here's my architect, here's my build team, here's a quote from my contractor.
yeah,
Somebody that's clearly building a professional team to support them.
yeah,
Because you're not experienced doesn't mean that you can't be organized, if that makes
yeah,
makes sense.
yeah, it does. Yeah. And just kind of going back to the fee side of things,
Mm.
you don't have a typical or state that a typical QS has to go on site every month, or you mentioned earlier about the asset manager, and that impacts on the fees and the total cost of finance, doesn't it?
Yeah. We never use a QS for a refurbishment project.
No.
If we're doing a ground up development, we would, but
Mhm.
99% of the refurbs we fund, we use an asset manager. It's The product fees cover the first drawdown per post completion. If
Yeah.
drawdown thereafter, it's £295 per draw. Uh,
Yeah.
so it's not an expensive process.
No, it doesn't eat into the profits there, does it?
No.
So, Josh, like myself, you like to keep fit. We see ourselves as athletes, don't we?
I don't think anyone's ever
Maybe
been
not.
an athlete before.
Athlete wannabes. No, how do you balance that with a corporate career that's got heaps of responsibility
Mm.
and this job does go into the evenings. It's not 9 to 5, is it, when you work in finance? So how do you slide that in? How do you fit that into your world?
I don't know, really. Just wake up early, try and fit it around the kids as best you can. I think you're right. This job is intense, but it's hugely rewarding, and I also find it very addictive.
Yeah,
Because like you say, you never ever stop thinking about deals and thinking about things that you can do better. I find that trying to fit in exercise keeps my head on track. I think it's kind of a
yeah.
crucial element to maintaining my sanity.
It's true, isn't it? No, it keeps one sharp, doesn't it? And yeah, it's I think it just gives you more zest for the job and for life in general.
Yeah, I'm far from your level of athleticism though. But I do appreciate you referring to me as an athlete. I might have to clip that and keep it.
There you go. Yeah. No, great. Thanks for coming on, Josh. That's been great. Really enjoyed that.
Thank you for the opportunity to have a chat and talk about Octane's proposition. We appreciate your time as well.
So you can see why plenty of developers like lenders like Octane, because they will give you a high loan to value against your purchase price, and they'll cover all the refurb costs, which means that your funds can be spread across this deal and the next one. So if this sounds good to you, get in touch with us and let's chat. See you next time.